the longer you're in trading, the more you make rules for yourself about things that you really try to follow as much as you can, things that make you a better trader or help you get better results. Today, I'll share with you these rules, some of these rules that are our favorites that most traders kind of ignore, don't know about. These are the things you find on YouTube or everywhere else. These are things that we made for ourselves, rules we follow by ourselves because we've seen the difference of it. So hopefully you can apply for your own trading and it will help you to perform better. So we'll dive right in.
All right, so the cool thing about being part of this, the Desired Trade Group is we've got a really good sample size of traders that, make it, some that take longer to develop, and some that just seem to constantly struggle. But let's go with the first one. The one I really want to emphasize, everyone was like, let me get my knees and with my little prayer is, stop, please stop adding subluxant positions or using a martingale type approach where you start adding, size to make up for a loss. I get it. It works 99% of the time, but that one time it doesn't, you go into the graveyard of disappointment. And it's so sad because it's one of those rules where it's always out there, and whether it's poker players or, sports bettors or, any type of gambling and even, in trading. It's just a rule that just doesn't work, but we see it all the time. We see it in the casino, you play, roulette and stuff. We see the adding. But, and again, the reason why people love it, because it works most of the time, but when it doesn't, it's game over, and you either have to, get more capital or it's just done. And we don't want to see these victims anymore. We call them victims because that's exactly what it is.
Yeah, definitely. It feels good until it doesn't, and that's the issue.
Yeah.
Speaking of losses, I think what most people do wrong is they tend to have like really tight stop losses where they don't want to lose too much. They want to make sure that they have a good reward to risk, like a very big target and a small stop loss. And I actually do the opposite. I try to give myself lots more room. I feel like if I give them more room, first of all, they don't hit as much, have a much better win rate, and I feel better myself because I don't like go into trades that trigger a stop loss and go my direction after right away.
Yeah. And then you feel better because, I mean, there's like a comfort level there, but you feel better because the math is also supporting that. Yeah. So really my answer to that is to put the stop wherever the optimal math says your stop should be. Right. And it's very rarely is it really jammed up there. Now there's certain scalping techniques where you can apply that. And if your profit factor is solid and you're like that, that's fine. But a lot of times when I hear about stop loss, and in fact, the number one question I get about what's directed in my strategy is about change. Can I move my stop closer? They're a little uncomfortable with a wider stop. And I say, no, that's the strategy. That's the math optimization. And it really hints comfort. Well, why do you want to do that? I'm comfortable there. I'm more comfortable. And my favorite phrase, if you want comfort, get a dog. Well, it's kind of true. I mean, this profession, it's like, doctor, to get that thing out of the in the surgery, we need to use this tool. Nah, I don't like that one. I'm going to use a hammer, no, so there's certain things that you just gotta it's just black and white. You can't do. And, in the case here is right. It's finding that optimal point, and that's through back test history or obviously just leveraging off of, our experience with the strategy. But, so I know it's sometimes uncomfortable to do certain things, particularly in trading, but we want to get you from A to B. And sometimes, you have to sort of make that commitment, say, this is what I have to do. This is what it says the rules are, and this is what's going to get me there. Just sort of build that muscle and take it in a strong way. Get comfort out of your game. All right, so here's one where it may not apply on swing trading and things like that, but more of a shorter term thing is this overuse of, they call multi-time frame analysis. All right, okay, I got everything. It's all lined up. It meets my rules. And now I'm going to check with the 30-minute chart, the hour chart, the daily, the weekly, and then monthly chart or something. Enough. All right. You have them, the numbers are here, back tested or, support it and say, here's the optimal point. Now, there may be certain events that trigger to look beyond, but it's not multi-time frame analysis. It's more market contextual. And we can go into that in a different video. Maybe we'll put a link for that, below, but we've done a lot of work on that. But it's about market context, not about everything lining up. Because really what you're doing is, even if you feel you have an edge, and the math may support that, the amount of trades that you eliminate, they become sort of phantom trades, actually are costing you more in the long run. So think about that when you're doing this market sort of, time frame analysis. It's kind of overrated, and to be honest with you, at times it's a little newbie.
Yeah, also what happens is that a lot of these trades, like you said, you're going to eliminate a lot of trades, but also you're going to go into trades that maybe it's like already too late because the daily is already there, the 30 minutes is already there, this one's already there. It's like too late for you to go in the market.
Yeah, that's a good point. I mean, by the time you wait for everything to line up, something must have happened dramatic to go in the way that you want it to go. The other thing I think along the line too is once you're in the trade is, really allowing the trade, allowing it to play out. Well, I didn't feel comfortable, or I love this one. It wasn't doing what it was supposed to be doing, right? Which in my mind, because, well, it hasn't done it yet, right? Because you're not stopped out at that point. So you have to allow patience. I mean, the best steak, takes about, a nice time. So you can't just put it in a microwave for a minute, right? You have to let it play out. And patience is a big part of this game. But really what we want is for something to happen before we're out. That's it. And when we give up because of patience or it didn't happen yet, it's almost like we're really just writing a check to, the brokerage firm or the trading gods and say, I've lost my patience. And at the end, we're really paid to be patient.
One of the rules I follow in terms of that, when I'm not sure of a trade, like I'm not sure if I should take it, if it really means this the criteria for the setup, or if it's like really a good play or with the market context, is I try to either skip it or I lower your size quite a bit to make it to still like a trade, but make it with like a very low risk. I'm not going to be micromanaging it or like playing with the exits all the time. I'll just leave it to run and kind of see the results at the end. But I put a very low risk, or if I'm really not sure, I just keep it and wait till the next trade. There's always going to be another trade coming, and one more you can take later on. So I prefer to skip, be out of it, and wait for the next one.
Yeah, I mean, we talk about comfort. I mean, I'm saying, you want comfortable, get a dog kind of thing. But no, I understand it's tough. It's to develop. You have to build that muscle. And reducing size is a way of doing it. You're actually reducing edge too, but it's okay if it's going to help you build that muscle so you can take it. So later on the road, you'll be at a higher size. That's fine. I think it's a sort of like a net positive in the whole developmental process. And understand that, there is another trade. And, I get a lot of this. Well, I had to move my stock quick or this, and I changed things. Well, you're really changing the formula of success, or at least, what the back tested results show. So keep that in mind. Look, we're far from perfect too. There are times where I'll move my stop because my mother-in-law is coming over tonight, that kind of thing. I mean, we all have those little nuances, but understand that there's some things you really don't want to ignore.
I'm going to add to this. So I have a rule I set up for myself, which is I like to scale in and out. Like I don't try to move my stop loss to trade the cash to perfect exit, but I do try to scale in and out. And partly it's because I scale in to be able to boost my return when the market's going your way and you have a chance to go back in to add more size to it, to kind of ride the trend. I do that a lot. That's really brought my profits quite a bit. The other thing is I try to scale out for my mindset. So if I'm not sure about a trade, I don't close it all. I don't like get out completely. I take some partials off over time. So usually like very small partial profits, but they add up over time and they kind of try to catch the top, but also kind of give me some peace of mind for the trade. Then I don't have to micromanage the trade. I don't have to go and try to find the perfect exit. I just take parts off when it goes to new highs and kind of let this run and wait for the trade to unfold.
I've seen some of your trades. I mean, you have some monster runs. Granted, not all full size. You're peeling off, but that involves a lot of patience and what we ignore sometimes. And I'm guilty of this too. In fact, one of my legacies, I think, in my trading life or whatever that may be, is that I should have pushed it more. I should have held longer. I took profits and moved on, and it seemed to work out, and it kept me, from a longevity standpoint. But I really like how you just sometimes let these suckers run. I'm like, wow, how does he do that? Like, I built years of patience, but I got to commend you. Like, it's tough to do. But yeah, that's what success in any business is. You're doing things that's tough to do. If it was that easy, everybody would be crushing it.
Definitely. If you have any rules you follow, any rules that make sense to you in trading, make sure you kind of load those rules. Tell us what you implement, what you use. Now, the next key thing is going to be following these rules. If you have rules you set for yourself, you got to follow them. Check out the link below. We have a training that Michael did about compliance, how to really stay disciplined, follow your plan 100% of the time. All the time, that have these times where you kind of go off the road and screw up everything. So you want to follow your rules. It's going to be a free training. Check it out. It's going to be a link below. The very first link. And you can watch this next and learn a lot from Michael and see how he does it to follow his rules.
And maybe you could teach me how to build muscle hold longer, right?
I love it. Check it out. And we'll catch you back here in the next video pretty soon. Ciao.